You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is David Smith. He's the senior analyst for the Morgan Report, which you can find online at silver-investor.com. Welcome to the show, David.
Hello, Jim.
Palladium, platinum, palladium, platinum. We're hearing that chant now, and you're saying it's just going nuts. And, in fact, you wanted to entitle the show Front-Running the Avalanche Supply and Demand of Palladium.
Avalanche takes time to build, and it's subtle. And nobody knows when or if it's going to happen, but when it does, it goes so quickly that you don't get a chance to either get out of the way or, in the case of the metals, to get in the way, to get some and then get out before the price runs away from you. So I think it's an apt analogy. And the metals, the platinum and palladium, have been moving back and forth lately, even though it seems like they should be a lot higher. But I think that there's a lot of stuff building up underneath the surface that when they finally get going and start to move, I think people will be very surprised and maybe even shocked at how quickly they take off.
We've talked very often about when a new opportunity seems to appear. By the time you hear about it, it's probably too late to take advantage of it. Is that the case here?
Well, I think not the case right now because, granted, it would have been nice if people could have bought $100 lower than where palladium is. But the point is, we're seeing all these indicators that, to me, indicate problematic supply and also increasing demand. And when those two tectonic forces grind together, that's when you create enough pressure to cause a price explosion. And I think that's going to happen. And whether or not it happens, this week or a few months from now or whenever it happens is less relevant than the fact that it's very likely that it will happen. And so when things are relatively quiet and you see things that all point in the same direction, which is to higher prices, then you take action when it's quiet rather than waiting for the avalanche to start moving and then trying to do something because you just don't have time.
And yet with the equity markets, we see people still trying to go in and buy your high-priced stuff saying, well, if it's worth that much, it must be worth that much. And, of course, we know if you buy at the peak, it's not worth that much.
Well, the Dow has been rising for 5 years, and it hasn't even had a correction of greater than 8% in the last year. So it could move substantially higher, but more and more it's being moved on levitation rather than new substantive buying because the volume has been declining, and a lot of up to 70% of the daily volume is high-frequency trading. So how do you make sense out of something like that? The point is you buy things that have not been realized by most participants as having great value, and I think the PGMs fit that sort of thing very nicely. They're not super undervalued, but they're certainly not overvalued, and given the supply-demand fundamentals moving forward, they are probably below fair value at this point. I was just reading this morning that the Johannesburg, South Africa, formed a platinum ETF, which was formed about a year ago. The holdings now top 1 million ounces, which makes it the largest PGM ETF holding. It's twice as big as the next largest one in, I believe it's based in New York. So you add those two together, 1.5 million ounces, that's about almost 12 to 15% of the annual production of platinum. And so these PGMs, ETFs are going to continue to grow in importance. They're going to take more metal off the market. There were 2 palladium ETFs that were put together, I believe both in South Africa within the last couple of weeks. It's pretty unusual for them to appear so quickly. I think they're going to take a lot more metal off the market. And it's just going to be a very fascinating situation to watch things evolve with the decreased production from Russia and with the problematic issues of the ongoing strikes and labor negotiations in South Africa. You put those two countries together and you're talking 80 to 85% of the PGM production globally in 2 very highly sensitive areas. And then the third area, which has been quiet lately, is Zimbabwe. But they are so dysfunctional with their government, who knows when or if they'll ever get to the point where they can really monetize the potential resources that they have in the PGMs in a much more substantive way than they have over the last many years.
So really just 3 major sources then for palladium: South Africa, Russia, and Zimbabwe.
Right, and there are a few North American sources, but in the mix of things, they're really pretty much chicken feed compared to the dominating forces out of the 3 countries we mentioned.
How close is palladium to catching platinum?
Well, I think this is pretty interesting, and again, this is my theory, and I can't prove it, and only time will tell if I'm correct. But I really think that palladium is going to be surprising to people in the way it closes the gap with platinum. If we look back over the last 10 or 15 years, there have been two huge surges in the platinum-palladium complex. One time, palladium made a moonshot to 1090, and another time, platinum made a moonshot to around $2,200. Those are in nominal dollars, and those did not occur simultaneously. They occurred pretty much on their own. I think their growth going to be lifted this time around, but I don't think they're necessarily going to move in tandem. And I think as people realize more and more how versatile palladium is and how it can take over a lot of the items that are, made with platinum, I think it's going to gain in a way that might be surprising to people as both metals move substantially higher.
The Prospectors and Developers Association of Canada conference in Toronto last month, the talk of the convention was private funds to help out all these junior mining companies that have fallen on hard times because the regular markets just aren't coming up with the cash. And a Canadian company, Waterton Global Resource Management, has raised more than $1 billion now privately to help people in the precious metals market. Is this the trend of the future?
It wouldn't surprise me to see this become more widespread. And, just as you were mentioning this, I was thinking, when you compare with the way equity is raised traditionally with the mining companies, most of them, especially the small to medium ones, where the money is raised and management has the entire say on what's going on and the shareholder hopes for the best, I would see this potentially as a very positive development, not only for the companies themselves, but for shareholders as well, too. Because if you have a private equity going in, those people want a say in what's going on, and they keep track of what's happening, and they're not going to put up with any garbage on the part of management, where management pays themselves excessive salaries and fritters away a lot of the money that was raised, because that's their hard-earned cash, and they want to see it do some good things. And so this may be just one more element in reinvigorating the mining sector and definitely separating the quality projects from the chaff.
Are we going to see the gap between gold and silver narrow?
I believe so. It's at a very large gap right now, which is far beyond what you would expect in the norm. It's way apart from what the actual presence of gold and silver relationship is in the ground itself. And if you watch that over time, it tends to narrow from, I think the high was in almost 100 to 1 before this market ever got started, and it's gone back down to, 40 to 1, and it goes back to 50 or 60, and right now it's toward the higher end of the relationship of undervaluing silver in relation to gold. And yet you see massive amounts of buying, 462 tons in January in India. You see world record sales of American Silver Eagles right up through the present day. And, in March they would have sold even more of them, but the U.S. Mint put a limit on how many would be available because they're having trouble getting enough silver domestically to meet, those productions. And of course, with the American Silver Eagle, by law, they are supposed to get their silver domestically rather than anywhere they can find it. It's not that there's a shortage of silver per se for the Silver Eagles, it's just a domestic shortage. But it's one more indication of the very robust demand for silver, where you're actually having more money going into silver than gold on a dollar basis, and yet you have this spread, as you mentioned, which is way off the mark in terms of what it should be in relationship not only to the gold and silver ratio over time historically, but also in terms of the amount of silver vis-a-vis gold that's available for investment purposes.
Well, and you'd think if there was a shortage of North American silver, that would have a big effect on the market, but not so much?
Well, it's just one more straw in the wind. I think really and I'm coming to see this more and more clearly, and I think I'm correct in it. I think it's the tonnage that is purchased in Asia that is going to be the huge driver. I mean, we talk about American Silver Eagles setting records, and that's important, but that alone is not going to take silver to the higher levels that we believe are in store. It's going to be continued massive buying on the part of Indians and on the part of Chinese and other Asian entities we have this massive transfer from west to east of real money wealth, which is gold, silver, and to a certain extent platinum and palladium.
And China, of course, continues its march to buy every piece of gold they can find.
That seems to be the case. There's increased demand for palladium in jewelry and platinum as well, and in addition to the applications that we're seeing globally, not just in industry but also in medicine, and the desire for people to hold it as a monetary instrument. I think if we look back in a few years, we're going to be really amazed at how many people have decided to buy platinum bullion coins and palladium bullion coins in addition to the more widely known gold and silver. Time will tell, but it would not surprise me to see a very large increase in investor demand alone in those entities.
David, always a thrill talking to you about the changes, and of course, now that palladium seems to be going on some kind of a wild ride, I guess we'll be going along on that trip together.
Well, that would be great, Jim. And, I just want to point out one thing, because once in a while I see in some of the comments that, end up on a site that, well, now that gold and silver are down, now they're talking about platinum and palladium because gold and silver didn't go up. And, that's not really the case. If people listen to our earlier House Street interviews, and if they read the writings that I have done, and that David Morgan has done, and Chris Marchese, through the Silver-Investor website and the Morgan Report, we've been talking about this situation with the PGMs for over 2 years, very specifically. And there was never any couching about it. And I said in several of the articles that I wrote that I believe platinum and palladium would be the first movers for their own supply-demand metrics, followed later by gold and silver for their own specific reasons. And so far, that seems to be what's evolving as we speak.
Thanks again, David. My guest has been David Smith. He's the senior analyst for the Morgan Report, which we have just been talking about. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. You can contact us at info@HowStreet.com. I'm Jim Goddard.